Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update this morning, specifically about Japan, the nuclear problems obviously they're having over there after the earthquake and the tsunami. We received a number of email questions, phone calls, things of that nature, not only through our radio show, but through our website, and just investors really wondering, what do you see, Brian? What are you doing right now with your client's portfolio? And where do you see maybe the risks or even the opportunities with this obviously devastating scenario for Japan? I want to look back in time and look at history, because history to me is a great kind of a telling point in all. And if I look at Japan, I look at Russia with Chernobyl, many years ago. I think that was well over 20 some years ago now. And I really look at what happened with that. And when they had a very similar problem that Japan's facing right now, it obviously had a short-term impact on their economy and also their investment markets. But ultimately, what I see happening from this, out of bad often comes improvement or good. And while this is going to be, in my opinion, a short-term really a mess to clean up, and unfortunately, we are losing lives and so forth, I think there's a lot of ultimately good that will come out of this, meaning safer regulations and so forth. But what's going to happen with the Japanese economy is you're going to have probably an impact on their GDP on the upside on the intermediate term. Not immediately over the next month or two, but as the building process starts, or the rebuilding process, you're going to see a spurt in their GDP growth. So ultimately, this earthquake, the tsunami, the nuclear problems that Japan's going to face, ultimately will help revitalize a very slow growth economy over there. Now, are we going to be off to the races? Absolutely not. But I think ultimately the sell-off that we saw in the last couple of days in Japan, the sell-off that we're seeing this morning in Japan, I think ultimately is going to be a net positive for investors who do not do knee-jerk reactions, reallocate assets, meaning not a buy and hold philosophy. What goes down may not come back as fast. There may be other opportunities to reposition that portfolio, which is exactly what we're looking at now. I'm going to go back and I'm going to talk about what I've talked about many times over the years on my radio show and also on these update videos, which is relative strength and making positive change to a portfolio. Often, asset categories or sectors of the investment markets, some will go down more than others when the market sells off. When the market comes back, often those sectors that sold off the most often come back the quickest and the most. As an example, Japan obviously as a sector or as an international play is selling off the most, probably more than 3 times any other investment equity-based sector out there. Ultimately, what I think is going to happen is once this stagnates on the downside and basically starts to reverse trend, I think ultimately Japan will be one of those that will have the opportunity to pop up very fast. But I'm going to basically look at playing the emerging markets, which are being hit, and I'm also going to be looking at playing small and mid cap within those emerging markets and in the domestic U.S. markets in the U.S. Those will be areas that I will be heavier concentration on. I believe that those are areas that are temporarily getting beat up a little bit more than large cap stocks are getting beat up. And I think ultimately the investment play or the idea is really going to be on the small and mid cap on the emerging market side primarily, and then we will jump to the domestic side in addition to that. I think if you don't have an investment strategy, I think if your money's not being really managed, and remember that Wall Street firm that you have, chances are you're dealing with a so-called advisor or broker. There is no investment strategy at all. There is no discipline to sell. There's no discipline to buy. They're basically acting as a broker, and it's ultimately up to you. So if you're getting hold on, things will come back, or let's just kind of wait and see, that may not be the right advice at all. Sometimes you need to change things up in the portfolio in order, in my opinion, to better your opportunity for return. This is Brian Resney with the Resney Wealth Report. I hope this brought you some good information today. If you do have questions about your portfolio, if you are tired of the Wall Street jargon or the conflicts of interest by your Wall Street broker, insurance agent, or your bank representative, and you want actual investment management without the conflicts of Wall Street, with a fee-only registered investment advisor who acts as a money manager, who actually manages portfolios, give our office a call. We would love to help get your portfolio back on track. Remember, folks, the longer you wait, the longer it's going to take for you to recoup what you've lost, and you will be dissatisfied ultimately if you don't make changes to your portfolio. We'd love to help you. Call our office. We're as easy as a phone call away as always. We do have offices throughout Florida and in Chicagoland, Illinois. Until this Sunday show, make sure you have yourself an extremely profitable week.